We will not escape 2016 without a catastrophic financial event happening. Nor do I believe we'll get through it without the cartel, if not being destroyed, taking a serious blow, as in $1,500 gold, $30 silver. Who knows what the number is, but the world is not fixed. And in fact, it's worse today than it's ever been in my lifetime.
Hi, and welcome to the X22 Report Spotlight. Today's guest is Andy Hoffman. Andy is the marketing director of Miles Franklin. You can see his work on Miles Franklin. He has a blog that he writes about the economy almost every single day. And I am very happy to have him back on the X22 Report Spotlight. Andy, welcome back to the Spotlight.
Well, thanks for having me, and perfectly timed since gold and silver are again challenging the highs that they were at before what I call the BS NFP attack last Friday.
Yeah, and we see that gold and silver, they're continually being suppressed. Gold then continually moves up, and we're getting very close to the $1,400 mark. And I have a funny feeling that very soon we're going to be going over that area. Do you see that?
Well, again, people need to realize that there's only 300 million Americans and 7.2 billion other people in the world. And of those 7.2 billion people, the vast majority are holding currencies in which the price of gold is either at, near, or in many cases well above previous all-time highs. So you have I don't know if you want to call it a stealth bull market going on, but for 2 years around the world, while precious metal prices were still held down here by a hell-bent cartel, prices were surging around the world, and now they are at all-time highs essentially everywhere. And gold and silver are now rising here amidst what is clearly what will be the big and final phase of the biggest precious metal bull market ever. The cartel, what they did was they bought themselves 4 years to make the world a lot worse by pushing prices down. But now the supply of gold and silver has undeniably peaked. The demand is much higher than it was. For example, when we ran out of silver in 2008 during the crisis, the level of demand was only a third of what it is today. And of course, you also have the inventories have been taken down to almost nothing, the above ground inventory. So I think we're setting up for something huge. But more importantly, what we're setting up for is for the final terminal phase of the collapsing of the biggest Ponzi scheme, fiat Ponzi scheme in history, as you see serially currencies collapsing around the world. And that will only accelerate because as the world gets worse, as the economies get worse, as the political situations get worse, as commodity prices get worse, people are going to be fleeing their currencies into the dollar as they have been for years, simply because it's more liquid. And that will only exacerbate the trends toward debt default and currency collapse. And of course, the purchasing of whatever physical gold and silver still remains above ground. So yes, I think we are reaching a critical juncture in the dollar-priced gold and silver market. I've said all year long, based on what I've seen, I didn't think that we were going to get through the year before the cartel suffering a major blow, and I believe that more than ever now.
Andy, I was listening to Harry Dent, and and I was listening to him on Across the Street, and he's still out there saying that gold is going to be going below $1,000 an ounce.
No, 400 is where he says it's going.
He said it was. He said it was going way down.
Yes.
What
you want my impression of Harry Dent?
Okay.
People, why won't you listen to me? I'm telling you, all those gold bugs, they don't understand what it is about. Gold is not money. We're in an information-based society right now. You couldn't possibly have gold as money. They don't understand that this is deflation. Everything is going to collapse, including gold.
That's it. That's my impression. Harry, gold is not money because it's decreed by governments. And no one more, including me, no one more than me, has said we're not going to have a gold standard. In fact, I think we're going to have digital money, Bitcoin-based money, because no one will ever trust governments again. Gold is money because it is something that is universally desired and has been throughout history, including and particularly during the biggest, quote, deflationary episodes of all time, like during the 2008 crisis, ran out of physical gold, and within a few months, even the paper price of gold was back up and was the best performing asset of the entire world, aside from QE-supported treasury bonds. So, if he thinks gold's going to go to $1,000, let him keep digging his own grave, especially if he thinks that gold is going to go to 400, where there wouldn't even be a single gold mine on Earth operating. So, no, I couldn't disagree with him more. And more importantly, he's been wrong. I mean, gold was $250 in the year 2000. Now it's $1,300. Name an asset, including PPT-supported stocks that have done better than that throughout this deflationary period.
He continually says, we're going to see deflation. Where are you at this point? Are you looking at deflation? You're looking at inflation? You're looking at both? How do you think this is going to play out?
Well, both. There's no such thing. First of all, and he knows this. Of course, he knows this. The definition of deflation has to do with the money supply. The money supply is only going to go parabolic as the fiat Ponzi scheme collapses. I mean, that's what a Ponzi scheme is. It must grow bigger. That's why you have the Bank of England doing QE and the Bank of Japan and the ECB and the negative interest rates and everyone around the world printing to oblivion. That we both agree on is not going to end. But as for, we have deflation, it's going to hit everything. Well, first of all, again, look at any period that's been considered deflationary throughout history. First, you have the Depression in the 1930s. What happened to gold? The government seized it and doubled the price. That doesn't sound deflationary to me. What happened during the 2008 crisis? Gold went down for a few weeks because the cartel knocked it down. And by the end of the year, it was up for the year while stock markets were crashed. And by the way, what he fails to talk about is that the physical market never went down. The price of gold, we ran out of gold and silver. Premiums were 30% in gold and they were 100% in silver. And you couldn't even get it. So no, the prices didn't go down during those deflationary periods. And if you go, you look at where we've been at any deflationary episode of the past, pick a time. Pick the 2011 European crisis. Pick last year when you had the yuan devaluation, the Brexit this year, the commodity collapse earlier this year. What happened to gold and silver? They went up. So to say that gold will go down during deflation, much less what he's talking about, which I, by the way, agree with, a massive collapse due to demographics, due to debts that have to be paid off because of all the money printing. You're talking about the worst deflation of all. Well, of course, gold and silver are going to go up because the currencies, which have already been collapsing, will only collapse more. But to say that gold will go down just because everything will go down, more importantly, to say that the dollar will become more valuable, and I'm not talking about other fiat currencies. Of course, the dollar, I've been saying for years, the dollar will go up against all the other fiat currencies simply because it's more liquid. But it's going to continue to lose purchasing power against real items of value like gold, as it has been for the past 15 years, even with the cartel suppressing prices. So, no, the things that you want to live on, of course, the things you need to live on, I should say, are going to continue to go up because when you print money, it's going to cause, especially when you have negative interest rates, it's going to cause insurance going to go up. It's going to cause rent to keep going up. It's going to cause, well, of course, health insurance is going to go up because of not only that, but the Obamacare and the demographics. All those things will go up, but everything else will go down. Things you don't need, like an iPhone or a television or an airline ticket, those will go down in value. But to say that everything will go down, much less the one substance that throughout history that's been actual money during times of crisis, is the most ridiculous thing I ever heard. And nothing will make me happier than watching this happen while he continues to say gold goes to 400. 400,000 is more likely before 400.
Andy, you wrote an article on the Miles Franklin blog area called Everything is Fixed, Not. Can you just explain to people what you are talking about? The government, I know, and we've talked about this quite a bit in our other interviews, where the government, Obama, the Fed, they're all out there trying to convince us that everything is fine. And you're saying everything is not fixed. What do you mean by that?
Well, forget what Obama, the government says. No one's listening. I mean, give me a break. It's just, I'm speechless to say, well, Wall Street and Washington are saying everything's fine. I'm not talking about the fact that they're saying, and I'm saying the PPT has gone absolutely berserk in the last 2 weeks. Remember, it's the summer doldrums for the most part, unless something absolutely crazy is going on, like a yuan devaluation. They tend to manage to get what they want. Again, this is an election, so they're even more maniacal. They're putting out crazy, jobs numbers. Not that anyone who doesn't read those numbers realizes that they're complete BS. And they've just been, they got the Dow going up. The rest of the world's stock markets are breaking down badly, but the Dow goes up every day. We're talking about record PE ratios, record price to cash flow ratios, record enterprise value to EBITDA ratios for the Russell 2000, which doesn't even make any money anymore. or never did make money. But the point is record valuations at a time where corporate earnings are now going to be down for the sixth straight quarter. GDP is, down. It's 1% for the last 3 quarters. This is the worst GDP performance the country pretty much has ever had, quote, outside of a recession. Durable goods, factory orders. Look at the productivity numbers the other day. Retail sales are absolutely collapsing. The CEO of Ford said that the auto bubble basically is deflating already. The subprime lendings, everything around it. Look what's going on in Europe. The banking system, they're trying to bail out banks as we speak. The stress test, the IMF calling Deutsche Bank the systematically most dangerous company in the world. All this is going on. The ramifications of the Brexit. Look at what's going on in Italy. Not just the banking system. They're going to have this referendum in October and vote out the prime minister, and the Five-Star Party is going to come in. In France, the state of emergency. In Japan, they just doubled their stock purchases. The Bank of England just increased their QE, and they said they're going to take interest rates to zero. And yet we're supposed to believe because they've got the Dow going up every day that everything's fixed. It's the most ridiculous thing in the whole world. And that's why behind the scenes, and what I wrote about this morning in my audio blog, which just came out about the craziness, interest rates are plummeting everywhere. Look here, look today. Interest rates in the United States, despite the great jobs numbers, have been falling. Interest rates around the world are falling. The Bank of England couldn't fill their QE order yesterday because everyone knows the rates are going to go even lower. Record low rates pretty much in all the sovereign nations, but not record low rates for you and me. Credit card rates have been going up there at their highest level since the 2009 crisis, just before it started. So again, you get a little brief respite in here. Because the stock market's up in August, but something is going to give, and something's going to give soon. Heck, this Monte Paschi, the thing in Italy, the bank that they said was bailed out, it wasn't even bailed out. They just said, yeah, you have by the end of the year to raise $5 billion and sell 9 billion euros of bad loans. They didn't even bail it out, and they're claiming they bailed it out. And the stock price is lower than before they said they were going to bail it out. So again, reality is going to hit, and it's going to hit in a big way. It may even be the gold and silver that does it for them. It's going to be either an event or just market action. Who knows what it is? But as I wrote in my first tweet yesterday, I just started tweeting. I said, don't be lulled to sleep because something is going to give, and something's going to give big and soon.
You mentioned you mentioned a lot, but you mentioned interest rates. Right now, we're holding steady, and the Fed is not raising interest rates, and they're not lowering interest rates. Do you think we're going to just stay on this course, or do you think the Fed is going to have to follow Bank of Japan, Europe, UK, and lower the interest rates?
Of course they're going to lower interest rates. It's what a Ponzi scheme is. That's what I'm talking about. You can't stop. The financial roach motel, once you get in, you can't get out type of thing. They've been trying to pretend everything's okay. In fact, Peter Schiff does a great job in talking about how the game has become simply pretending that they're thinking about raising rates so that they don't have to admit that the economy is collapsing as it is. Look at every number that comes out. The GDP numbers the last 3 quarters are like 1.1, 0.8, and 1.2, and that's the goose double seasonally adjusted numbers. And yet they're telling us the economy is doing well. The point is, of course they're going to have to. The other problem with pretending that you're not going to raise rates while everyone else is cutting them to negative is that it makes the dollar get even stronger. And when you have corporate earnings down for 6 quarters in a row, and you're dying to get your export industry going again, the last thing you want is a surging dollar, let alone when all it's going to do is going to hasten what I called last year. And by the way, I said it right before the Chinese started devaluing the yuan. In fact, 24 hours before is when I wrote the upcoming cataclysmic financial big bang to end all big bang. And that's going to be when the Chinese once and for all start to devalue the yuan in a big way, not the 6 or 7% like they've done it, but the 20 or 40% that they need to, because their exports are down 10, 15% year over year, and they keep going down. Their whole bubble is falling apart. Their imports are down even more than their exports. So again, you want to pretend and make the dollar strong. You're only going to push the PBOC's hands to start devaluing the yuan. And then, of course, the dollar is going to have to devalue because it's going to be so strong that there won't be a single export-related job left. And that's even before Donald Trump comes in and does who knows what with tariffs and other things that will kill trade.
So we talked about the European banks and the stress tests out there, and and most of them are failing. Most of them are insolvent. What about the U.S. banks? Because we had a stress test here in the U.S. and they looked at Fannie and Freddie, and they're saying if there's another financial crisis, they're going to need like $126 million bailout once again, just like we had back in 2008. Are the rest of the banks here in the United States, are they doing well?
You mean Fannie and Freddie, which are now owned by the government,
Yes.
and by the way, have $5 trillion of debt, which is conveniently held off balance sheet. For some reason, the government doesn't consider it to be debt. So if you want to use 19 trillion as our debt, it's really 24 trillion, excluding the unfunded liabilities, of course, of who knows how much. But of course, they're all insolvent. The problem is, like the dollar being and I hate that, clean as shirt and the dirty laundry type thing. The dollar is the most liquid, so people send safe haven capital over to it. Just like the U.S. banks are supported by the PPT and that same strong dollar, so people buy the banks, but they're not more solvent. I mean, look, like I said, look at any real economic data in our country. Let alone all the loans to the oil industry, to the auto industry, to the breaking up now. The venture capital is falling apart. I mean, all this stuff that's falling apart. And of course, the biggest pink elf in the room is that they all have these derivatives that are tied to one another. Deutsche Bank goes, they all go. And honestly, JP Morgan's derivative book is barely smaller than Deutsche Bank's. So again, it's just kind of like the eye of the storm at the moment. The United States, as bad as things are over here, is just because it has the ability to print more money, and it's not in the middle of Europe where the whole continent is falling apart, or South America, which is hyperinflating. It gets safe haven flows, and people temporarily believe, I guess everything's fine. But of course it's not fine. I mean, the earnings of the banks haven't been getting any better. They've been laying people off, not hiring people. So again, it all comes down to what's hidden off the balance sheet in all these derivatives. I think they're just as insolvent as all the European banks, and they're all intertwined with each other. So it's just a matter of, as I've always said, the cancer, it moves up the totem pole. The dollar is at the top, and everything related to the dollar, which would include the banks over here. But right now, it's contaminating and destroying the rest of the world, and eventually it'll get here, and those banks will be begging for bailouts, which like in Titanic, an absolution that will never come, other than by hyperinflation.
Do you think the Fed has ever stopped QE?
I wrote an article way back when called "The End of QE," LOL, and "End of QE" had quotes around it. Of course not. I mean, first of all, all you have to do is look at the stock market going up every single day with the same. I wrote the Dow Jones Propaganda Average article 4.5 years ago. I wrote about the dead ringer algorithm, in which the Dow bottoms at about 10 a.m. Eastern Standard Time every day, which happens to be the time of the Fed's open market operations. Then it gradually goes up for the rest of the day. It's been doing this 80% of all trading days for at least 5 years. And a lot of other days are what I call a variations thereof algorithm, which is pretty close to the prototypical dead ringer, but it's not quite. The point is, of course, they're in there printing money and buying the stock market. How else can it go up? And then again, you look at the bonds. Yeah, I know there's a lot of people out there, a lot of institutions that are buying treasuries simply because they have yield and they know the Fed's going to QE. But let's face it, the Chinese have been massive sellers of treasuries, and you haven't even seen a blip in the price. Of course they're buying treasuries. Of course they do. Look at all the off-balance sheet swaps. They even admit that they have an off-balance sheet swap program with the ECB and the banks over there. And they do it because they don't have to report that they're monetizing. They call them off-balance sheet derivative swaps as opposed to transactions in which you'd see that they were buying assets. Let alone the fact that, the Treasury, the Fed's balance sheet has continued to gradually rise throughout this time that they were A, tapering, and B, stopped completely. Why? Because they're reinvesting still as policy, they reinvest all the maturing treasuries back in. So they are still doing QE. And so, to believe that they've stopped is ridiculous. And to believe that they're going to not pick it up is even more ridiculous because, look, at some point they're going to have to do the heavy lifting again. Now that, look, the ECB has failed. I mean, they're at negative 4.4%. They're QEing, 85 billion euros a month. They're doing corporate bonds, junk bonds, you name it. And it's still not working. Europe is completely falling apart. The Bank of Japan is literally running out of stocks. Forget bonds. They're running out of stocks to buy. So at some point, and we know what the Chinese are doing. I mean, they're out there telling us that their social financing, as they call it, otherwise IEQE, is off the charts. So at some point, the U.S. Fed is going to have to pick up the pace. And it'll probably take a crisis. They lose control of the stock market for a week or two, or oil prices, or interest rates, or God forbid, gold. And then they come in and they become the leader. And I got my article name, all ready to go. Ding dong, the Fed is dead. Not that central banks haven't died already in the credibility of the Fed, but truly the day that the Fed is forced to overtly announce that it's back in the QE and ZERP and potentially NERP game, that is really the end game. Because this is why they're so scared to do it or even hint at it. The second the Fed comes out and says, yeah, we're gonna have to lower rates by 0.25%, or we're gonna raise QE, gold will go no offer, silver will go no offer that day. They'll probably be able to hold the stock market up for a while, but there will be no gold and silver to be had anywhere in the world the second they announce it. And that, in a nutshell, is why the Fed pretends that it's always considering a rate hike, as opposed to talking about what everyone else in the world sees of the reality of the global economy.
Andy, would you say that's the signal to everyone? If the Fed comes out and says, okay, we're going to have to do more quantitative easing, we're going to have to put it into overdrive. Is that the signal where the economy right there and then is starting to fall apart, and people should get as much gold and silver as they possibly can, because there'll be a point where they won't be able to get anything?
Well, I think at that point it's going to be too late. Yeah, they don't do anything. I wrote this article years ago called "Priceless Precious Metals versus Worthless Dollars," and that's my answer to all what if questions. When people say, "Well, what if they confiscate gold? What if they windfall tax it? What if they come to my house?" What I'm trying to say in that article is, the government, the Fed, the central bank, they don't do, look at them. Look what they're doing. Look at the central banks, what they're doing now. They don't do anything in a vacuum. They do it as a reaction. Oh, there's a Brexit? The Bank of England's got to cut rates and do QE. Oh, the economy's falling apart. We have a migrancy crisis. All this stuff going on, ECB. Let's go to negative 0.4%. They do things in reaction. The Fed is, when everything is falling apart, that's when they're going to say, all right, the market's crashing. We gotta go to negative interest rates and try to save it. But at that point, you'll probably be way past the crisis. And since gold and silver are already in such short supply around the world, remember, as I said, nearly every place in the world, it's already at an all-time high. So it's difficult enough to get around the world. It's amazing you could still get it here because these very factors I'm talking about, there's still supply availability in the place where people need it the most and the prices are the cheapest. But I think by the time the Fed is forced to announce it, and again, that's the key word, forced, they do nothing in a preemptive way. They try to kick the can as long as possible, and they only act when they're forced by collapsing markets to do so. That's, at that point, yeah, it's a signal that you not should get gold and silver. It's a signal that you should have gotten it and it's too late.
When you say forced, like what do you mean? Like what would happen that would force them?
Crashing markets.
So if you're saying that,
what if we, there's a run on the Italian banks, for instance, and just to pick one thing, which is a very plausible scenario and very plausible in the very near term. And what's going to happen to gold and silver? People are going to it's going to sell out within seconds. What's going to happen to stock markets if there's a run on Italian banks? Well, starting with the Italian stock market and cascading through Europe, and even here, even the PPT would have trouble stopping that one over here. You're going to have crashing markets. And what's the Fed going to do? Remember, when you had the Brexit, and the Brexit in itself was not this, it's an incredibly long-term bearish event for Europe, but it's like the Brexit alone destroyed Europe. In fact, it's great for the UK. It's great for the English people. But what did all the banks say when you had stocks go down? Heck, they didn't even wait for the stocks to go down. They knew stocks would go down. They said, we will basically do whatever it takes to prevent stock markets from going down. That's what they said before. They said that day, we're ready. They had a big meeting, in fact, the day of Brexit in Basel, Switzerland.
Yes.
The Bank of Japan minister was there, the Bank of Switzerland, who knows who was there from the Fed. And they're all going, okay, if this happens, we are going to be in there with every amount of our printing money and buying power imaginable. That's what they were saying they were doing beforehand. Let alone once they were losing control. You can bet that they doubled up their efforts 2 days later when it looked like everything was going to fall apart. So that's what I'm talking about. There are plenty of events out there that can do that. Plenty of events out there, many of which are black swans that we don't even know about. So again, it all comes down to the Fed. The closest the Fed will get to doing something preemptively is what I just said. The day before the Brexit, knowing that it's a 50% chance they're going to lose, they'll go in and say, don't worry, people, we're going to have your backs. But for the most part, they don't have the time to even react a day. They see it happen, and then they just get in there with their covert QE and money printing and PPT and cartel suppression. And if it doesn't work, well, then they come out with the heavy-duty barrels of actually saying it. We're here to do whatever it takes, as if anyone is not going to realize that whatever it takes is the worst possible thing you could do. The fact that Mario Draghi said, I will do whatever it takes to save the euro in July 2012. And since then, the euro has completely collapsed. Europe has completely collapsed. And we're on the verge of there being no Europe. And yet people still take at face value when central bankers say, we will do whatever it takes. In fact, the the head of the Bank of Japan's, what's his name? Kuroda, back when they did the negative interest rates a few months back, he actually used the words, we will do whatever it takes to save things, as if he subconsciously believed that somehow people think those words mean anything. Whatever it takes means hyperinflation. It means destroying your currency. And no, Kuroda, not in a good way. There's no good way of destroying your currency. It means people will be terrified of what you're doing, not that they were going to believe it's going to be a positive. And so that's where we stand, the state of the world right now. My opinion is, from beginning of the year, I have said, back in February, I was saying, we will not escape 2016 without a catastrophic financial event happening. And so far, we've seen plenty. We've seen a lot of markets crash, a lot of stock markets, a lot of currencies, a lot of commodities. The political and geopolitical strife, the social unrest is everywhere. But we still got 4 months left, and we still got this election going on. We got a referendum in Italy. We got so much stuff that's going to hit in like a tsunami in the next coming months. And I still don't believe we'll get through 2016 without something catastrophic happening, nor do I believe we'll get through it without the cartel, if not being destroyed, taking a serious blow, as in $1,500 gold, $30 silver. Who knows what the number is, but the world is not fixed, as you asked me. And in fact, it's worse today than it's ever been in my lifetime.
You said we're not going to make it out of this year without something happening. Now, many people say they're trying to hold this off until after the elections. Do you see this happening before the elections, or do you think it's going to happen after the elections?
Well, again, I'm not one of these, the reason I have a lot of credibility is I'm not one of these people who say, well, it's going to happen at this time and it's going to happen because of this. Look, let's face it. We know that the people in charge of America, want to keep it going past the election. Because if the worse things get, the less likely. Look, I already think Hillary's lost. I mean, I think it's going to be a landslide between the economy and the emails and the Clinton Foundation and her spasms or whatever she's got. I don't think there's a chance in hell she can win. But of course, they're going to do everything they can, from manipulating jobs reports to trying to suppress gold, hold the stock market up, propaganda, blah, blah, blah. They'll do everything they can. But again, they have to do that all the time now. It's not just the election. The election only makes them that much more desperate. But do I believe that they'll make it to the election just because they want to? Think about what they've wanted to do. Think of what, for instance, what has Draghi wanted to do since saying whatever it takes 4 years ago? He's wanted Europe to get better. Unfortunately, it's the worst it's been since World War II, since the middle of World War II, when everyone was killing each other. That's how bad Europe is right now, and that's the direction it's going. So do they want it to last to the election? Of course they wanted to. Will they do everything in their power? Yeah, of course they want to, just like the cartel. We'll keep naked shorting gold and silver every second of every day, including weekends and nighttime sessions, until they lose. And will they make it to the election? I don't know. Well, and again, it's not necessarily the U.S. The U.S. is the strong sister. What if Italy falls apart before the election? What if? When Matteo Renzi loses his referendum in October and is kicked out of office, and the Five Star Movement comes in and says, we want an ITAL exit vote in 3 months. Will the U.S. PPT be able to survive through the election when that happens? I don't know. What if Deutsche Bank collapses before then? Will we make it to the election without something happening? Don't know. But when I say I don't believe we're going to get through the year end without something terrible happening, well, the year end is pretty close from now, and there's not a lot of time between now and the election, and there's even less time from the election to year end. So I don't know. And again, I'm not saying we will have Armageddon by year end. I'm saying things are falling apart so rapidly and I love it. Here's one more thing. I've been saying for 2 years, commodity prices are going to collapse. I focused on David Stockman's Great Deformation book, one of the most brilliant theses ever, about how all the money printing and financial engineering over all the years has created pretty much an oversupply of everything out there, and conversely, an undersupply of gold and silver because they suppress the prices. And as a result, it's going to cascade for years to come, let alone with all the horrific demographic trends, which are extremely deflationary, that are going to go on for decades to come in the Western world. And I said back then, January 2015, that commodities are going to crash. Well, the CRB index is down 20%. Oil prices hit $25 a few weeks ago. They came back this year based on rumors, innuendo, despite the fact that demand is falling and supply is rising and inventories are higher than they've ever been. And it goes up $2. And I get people writing me going, you're going to be so wrong. Oil's going to surge. It's going to break out to new highs. And you guys, you got to be. I mean, how much more rose-colored glasses can you have? I mean, are you traders? Are you just believers? You just want things to stay? No, things are going to get worse. Commodity prices have nowhere to go but down. When you're talking about collapsing demand and too much supply and too much debt on top of that, why anyone would believe that commodities, which are, falling commodities is max pain for most of the world. And max pain is what we're going to get. There's only 3 commodities I could think of, which aren't commodities, which are going to go up. And that's gold, silver, and platinum.
Andy, thank you very much for being on the X22 Report Spotlight. Once again, how can people see all your work and your articles and everything like that?
Again, Miles Franklin, we've been around 27 years, one of the largest bullion dealers in the nation, not a single registered complaint all that time. I write every day for free at milesfranklin.com. You can email me at ahoffman@milesfranklin.com. And actually, I am now tweeting, as I said. I think it's Andy_Hoffman_MF. I'll be tweeting now. Just, email me, go to our website, just ask us questions. That's what we're here to do, answer your questions.
Andy, once again, thank you very much for being on the Spotlight.
You're very welcome, Dave.